All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow, to all the subscribers. Welcome back. And as we dive into this chart, I do want every single investor and viewer to be aware that I have so much information to share with you guys towards the end of this video that we're going to touch base on the S&P 500 index, how the Fed is responding, what they see moving forward and how they feel and how they're reacting, and also the 10-year treasury. So we're going to talk about what's going on in the market overall and how it's affecting individual stocks and the bigger picture. So stay tuned for all that information, and we're going to talk about the tweet of the day. So here we are with NEO obviously falling and hitting newer lows all the way back to prices from November 10th. Now, could NEO go lower? I mean, it's getting close to the point where we have to see if a consolidation or support forms or if it continues to break out into the lower spectrum of this chart. So based off the history of the chart and also the support that we're going to look at in just a moment, the next support level would be down here at this point if it breaks through today's support that we're going to talk about leading into tomorrow, which is 35.87. I'd write that down. Anywhere in the 35.80 range and below that would be your next support before looking at anything lower. So just the 35.80, 35.50 range. Within that range, I would really keep a close eye on this stock to see if it breaks through that, because it could go much lower than what we're looking at right now if it breaks through this support that we're going to talk about, and the next one being in the $35 range. So the 50-day moving average is up here at 41.60. Anything below that is bearish. Anything above that is bullish. So our support here for tomorrow, the first point of reference to look at is right here at 37.59. If that gets broken through, I'd watch this very carefully, see how fast it's moving downwards, and if the bulls are trying to reappear and bring it back up. Now, on the other hand, we have our resistance, and that is right up here at 39.78. We're currently sitting at 38.20. 39.78 is super important to keep in mind moving forward. So we want to watch that carefully. So 39.78, if it gets broken through, that lets us know where the momentum is going. And it's an indicator for us investors to know that the bulls are starting to work their way up one step closer to their goal. But it does not signify that the bulls have gained control. They need to break through the 50-day moving average to reach newer highs and new resistance levels. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Now, I also want you guys to stay tuned to the very end because we have a lot to cover about the S&P 500 index, the 10-year treasury, and also the Fed's responses. So stay tuned for all that information. So for everyone that has stayed to this point in the video, I'm going to go ahead and show you guys a short clip of a video that I talked about several times, and I wanted every single investor and viewer to not miss out on it. And I know that sometimes you guys look at my videos and you're like, oh my gosh, 10 minutes, 14 minutes, you know, and it's really because I put in the effort and time. I know some people say I talk a lot, but I really need you guys to understand. And not only that, but some of you guys might understand everything, but there's a lot of investors and viewers that are completely unaware to what's going on. So I like to break everything down as simplified as possible, and it sometimes takes time, as I'm speaking right now. So all I'm asking for is a minute of your time. The next minute is going to show the date of that video, where we were at, what I drew out, and even though the drawing is not exactly the same, it's going in the same direction, and these are the circles I want you to remember when I talk about the peaks and how the stock market was going to continue to reflect. I also talk about different topics there, which we're going to touch base after the video. So stay tuned and hang on tight, and thank you guys so much for your patience. I hope you guys are learning and that you guys are receiving information and insight that gives you some better understanding of the market. Stay tuned. 39.50, and it's been going down since. So one thing I want us to pay close attention to is if the market continues to build this behavior. This is the behavior that I'm seeing, right? If it continues this and we're hitting newer lows, and it continues to hit these peaks, right? Then the market is struggling to hold itself up because the repurchase agreements of these dates do not exist right now. And a lot of people don't realize how much of an impact the Federal Reserve's decisions has on the overall market. Like, the only reason why the market's been pushing up higher, it's all the forward outlook and hope, but it's these dates. These dates hold up the market from going any lower or from staying stagnant. It keeps on pushing it. It keeps on creating anticipation, excitement, the speculation and the hope of seeing ticker symbols going up. So I didn't really want to make this video, and I didn't want to have to, but I need to make every single investor and viewer aware that we might be in the middle of a crash or correction already getting started. So as you could see, the drawing is not exactly the same, but we could see the peaks that I was talking about and the direction that we're going in, right? That's what I wanted every single investor and viewer to be aware of. And then I went ahead and slightly talked about the repurchase agreements. Now, I want every single investor and viewer to be aware that if you want to know more about that, I talk about it in the full video, but it has some correlation to do with what we talked about yesterday, which is right here, the treasury yield of 10 years. It's right now at 1.55. Yesterday, I was at 1.47. I told every single investor, add this to your watch list or keep it somewhere where you can search it up or look at it and treat it as if it's the S&P 500, the Dow, and the NASDAQ, or the Russell 2000. Many people use these to understand the overall markets, and they're all down, and this is going up. Now, the higher this goes, the more down these can go, but there will be a point where this can start going up, and even if this is going higher, this won't have so much of an effect on the overall market. The reason why it's affecting the market is because it's moving up rapidly and faster than expected, which is putting fear and uncertainty into the markets. Now, I talked about a bigger picture here about this, that this could reach back to 2%. This could reach back up to 3%. And if it kind of stabilizes, the market's going to feel it. But then once everything kind of rebalances, the market can start to pull itself back up, even if this was to go higher, sideways, or downwards, which is what's bound to probably happen. Or if things do change by the Fed, it can really have an impact on stabilizing this or pulling it back down. But as we can read right here, Fed Chair Powell, Fed will be patient, quote unquote, on keeping easy money policy. That means that they're not going to really do much about anything if interest rates go up, and he's going to try his best to keep it near zero, even if inflationary pressures start to rise. So basically, if inflation comes, he's going to try to keep rates low, but he's going to allow inflation to play itself out. And it's bound to happen. It might be coming, and there's going to be a big meeting towards the end of March or April, and we may be feeling some turbulence for the next coming months. Now, Treasury yield is going upwards faster than expected as well. So even if he's saying, we're going to keep rates near zero, rates can have a mind of its own. Even if he wants to keep it near zero, they can start to inflate as well with everything else. And this could have an effect overall on the S&P, the Dow, and the NASDAQ. So we need to be aware of this and not be scared of this. There's two ways to look at the market when it's going down: actually a misfortune or an opportunity. So it's all about your perspective, your goal, and this is where you learn that day trading and swing trading is only good while there's a bull market. It becomes a lot more difficult when the market's going down or it's turbulent, and also it's not the true way, in my opinion, of investing. I day trade and swing trade myself. It's one good strategy, but it's not an investor's strategy. A true investor, and I hope I'm not offending anyone or anything like that, but the overall true investor invests long term. You need to invest 1 month, 6 months, 1 year, 5 years out from now. That's what investing is. The shorter the time you are in a stock, the closer you are to gambling or playing a game. Like, that's all it really is. Now, there are strategies to day trade and swing trade that can make you a quick buck. as long as you know what you're doing. But to be a successful, profitable investor and minimize losses and maximize profits, you have to be a strategic investor looking for the opportunity, and you have to understand the stocks that you're investing in, because if you don't understand them, don't invest in them at all. So here we are with the tweet of the day. What is the first thing you look for in a stock to find any interest or even considering to do any further due diligence? I look forward to everyone's comments. I will be mentioning what it is that I look for first in tomorrow's video. So everyone's comments were very interesting. I appreciate you guys taking the time to comment, and they were very insightful, not only for myself, but for every single investor over at the Twitter, to see those comments and learn from them. There was some great comments and strategies there. So the first thing I look for, believe it or not, and I'm just going to click on, let's just click on Apple. And Apple is like the highest market cap. But the first thing I look for is market cap. Believe it or not, that's the first thing I look for. The second thing I look for is profitability. How profitable are they compared to their revenue? So you could see here that 25% of their revenue per year is profit. So they're 25% profitable. That's Apple. Now there's a lot of other smaller companies that make less revenue but more net income, and they're growing really fast. So that's what I like to look for. Those are the two things: profitability and net income, and then the market cap. The market cap lets you know where it's at, how much higher it could go, and also what it's worth today could be double or triple in the years to come, or if you want to say it in simpler terms, tomorrow. So very interesting stuff to really look for in a stock. Those are like the two most simplest things: market cap, profitability, and within that profitability, how much of it is revenue, how much of it is profit, and then divide it to get a percentage of what the profit really is. And you could see it here. It's already calculated about 20%. I said 25, but it's about 20% of the revenue, which means that they are making 200 billion in money coming in, but what's staying in the books is 20% of that. So it's a pretty small percentage for all the movement of money that's going on. But not to say that Apple is not a powerhouse. This is a major powerhouse. It was just to use it as a simple example. As always, guys, thank you guys so much for watching, and let's make some money.